Hello, everyone, and welcome to this webinar on how can data leverage your equity narrative. So your speakers today will be Nicolas Meunier, Head of Advisory and IR Solutions at Euronext Corporate Services. Euronext provides corporate services to more than 800 listed companies in the field of investor relations, communication, governance, and compliance. Advisory and IR solutions address the most critical needs of companies on capital markets, empowering listed companies with cutting-edge solutions and tailor-made advisory services at every stage of their financing journey. Next, we have Simon Bennison, Head of Digital Strategy at Emperor. Emperor is a leading UK corporate communications agency and a major player in Europe, helping companies at every stage of their corporate communications journey. And finally, Laurent Lepinet, Head of Development at Praexo, which is offering investor relations services based on data collection and analytics to transform exclusive information companies own and improve stakeholders' engagement. So now let's go through the agenda. So for the first 45 minutes, we will focus on 3 defining moments that influence your equity narrative. So starting off with the IPO and the journey to going public, then life as a public company and today and what's to come. And finally, we will dedicate about 10 minutes for question and answers. So please do not hesitate to send us questions in the chat during this webinar. And so before starting off, we invite you to answer this question. So which of these types of data do you find most valuable when defining your equity story? And we will also take some few minutes at the end of this webinar to discuss more about it. So now let's start with the IPO and the journey to going public, and I'll pass on to you, Nicholas.
Thank you, Gabrielle, and good morning, everyone. Happy to join today. I hope this one will be very educational for you all. Let's start with the IPO, which is naturally the very beginning of the equity narrative. That's the first time corporates are going public and they are publicly tell the story to investors. This is a combination of the story that will be told, the audience that is already that is addressed by company, and of course the context. So how data can help in that context for the IPO readiness? I would like to say that at IPO, most of the time intelligence is monopolized by banks, and corporates have to leverage data to rebalance the power of banks with a more challenging dialogue, a more optimized IPO process. Data is key in the IPO process from the very beginning of constructing the equity narrative, but also for the pre-deal investment, investor education, but also for the book building. As you can see on these slides, I would suggest that there are 3 main areas where corporates could be supported by data to make the most of their IPO. The first one, of course, is to avoid interferences of the market conditions, market sentiment. Data can help to manage how the IPO momentum is at the moment, given all the league tables, IPO tracking that will help corporates to assess the conditions, but also to scroll the web, to scroll the noise around the sector, around an IPO project. That's key for corporates to make sure that their project is aligned with market expectation. The second field is about being more impactful, more relevant for investors. This is about the story. The speakers will tell more about how to build this story, but for sure, data can help to assess industrial valuation multiples, given recent transaction, recent IPO, recent fundraising, for example, but also to get access to the industrial news flow, impactful events that will be screened by investors when preparing an investment decision. So most companies listed are publicly, I would say, available in terms of data. So for the candidate to the IPO, it's very important to have this recent track record and price evolution to benchmark their own project with investors. The third field is obviously the audience. As I mentioned earlier, investors targeting is key to make sure that the book building is consistent and that the offer is targeted to the right audience. So a lot of data is available here to make sure that the main industrial peers holders are taken into account into the roadshow, but also that screening an investor's portfolio, an investor behavior before building the book of the IPO is key also, not only for raising the money, but preparing the post-IPO journey of the company, and also accessing investors' report. We can move to the next slide when we talk about the audience. As you could see, and I will make it very short, preparing the narrative is also preparing a target and prepare and target a consistent audience for the company. There is a story, but also there is an audience for the story, and it's not the same given what you will push in terms of message, in terms of profile. How it is possible? First of all, because data, aggregate position of worldwide asset managers are made available by data intelligence. That's key to understand that there is a transparent world here, and it's possible to assess who are the asset manager who would be targeted for the IPO process. Why? Because asset managers are publicly disclosing their position in listed company. This is very simple. There is a competition in the asset management world. They want to collect more money. They are transparent. They are reporting on their performance, and this data is available. There is an aggregation that is required to make sure that the information is useful for the management, but this is very valuable in terms of intelligence. When I wouldn't say that this data is real time available. This is protecting the integrity of the market, obviously, but there is more and more, I would say, a frequent availability of this information, from quarterly reporting to monthly reporting, and even sometimes for weekly reporting of asset managers. So data here is more and more available and helps to provide key information to target the audience of the story. And I would conclude with what are we talking about? You have it on this slide. I will not comment, but just to give you an indication that when you target an audience, be sure that when being listed on Euronext, you will not target only your domestic investors, but you will be available for 67 countries of investors if you want to push your story. France is at the minimum in terms of domestic investors. Norway is at the opposite, with 38% of investors being domestic. But that gives an indication on how the roadmap should be built to make sure that you don't miss any investment pocket when you are preparing an IPO. And once again, this is rebalancing your information with banks and make sure that you will have a consistent dialogue with banks which are preparing the IPO.
Thank you, Nicolas. I think, sorry, and I think it's very clear what you just pointed out. When we consider the journey to an IPO for a company, and we consider how the equity narrative, the equity story is going to be built, it's all about investor meetings, investor perception, investor feedbacks analysis, and it can start very early in the process. It can start years before the process really happens. And you need to be structured to be able to leverage that feedback. And in many occasions, and as a former equity capital market banker, that's something that we experienced too many times. Companies are not ready. The investor relation officer only arrives in the game at the very late stage, many times too many times after the IPO is executed and the listed is done. So what do you do with all this valuable information? What do you do with all this data that you're going to be getting from your investors, from your strategic investors, from individual investors, from hedge funds, that will help you improve your equity story? And how do you really leverage that over time, not only at the time of the IPO, but to prepare for anything else? And we have also to be very conscious of the fact that, yes, IPOs are a very successful, very attractive path, but we also must not forget that many companies in the process of an IPO will drop out for many reasons, because they do an M&A transaction, because they have other market conditions. And what we recognize in this process is that too many times there's been some disappointments for companies also when they are preparing this IPO. Why? Why we say that? We say that because we've seen in the past few years a lot of new forms of capital raising emerge. We can discuss about that, but the direct listings, the crossover investors who are more and more active both on the private side and on the public side. We see the rise of SPACs as well, which is a new form of capital raising, but also the fact that PE funds are more and more also going to the stock exchange to raise funds and accelerate their own investment capacities. All these are pointing out to some pain points for the capital raising and for the IPO process. And what we said and what Nicolas also pointed out is how, as a company, do you rebalance power? Do you rebalance power versus those who most generally have been collecting the information, helping you draw your equity story, improve your equity story, your advisors, the banks, etc. Well, you can do that. You can help them, and it's also beneficial to you. And how do you do that? You do that by collecting properly the data, analyzing properly the data that you are getting, and making sure that those who inside the company will be using this information to fine-tune your equity story and also help you draw a proper strategy going forward, will have access to this information. That's what we're doing. We consider that feedbacks can be analyzed, can be structured, and can be very much useful for you as a company. I can also point out to the recent comment from the IPO of Bully, for example, where Alain Caffey, one of the partner of Ventec, pointed out to the fact that if he had one thing that he regretted in the process of the IPO, it was clearly the fact that investor relation officer came very late in the equation of the company, and he felt a little bit unprepared to the IPO. You can do that as a company. You can use technological tools to do that. To help you capture the information and use this information properly. When we say information, we say data. You can do that. If we turn to the next page, and I won't extend on too much on all these potential conflict of interest as well in the collection of data. If you let others do that yourself. If you turn to the slide 9 on how we exploit qualified information, for us, what is very important is first, of course, to organize the collection of data. Organizing the collection of data means putting in place the right tools to capture this information. How you structure the intelligence gathering and information sharing inside the company and the stakeholders who help you in the IPO process. That is very important. How this information also is used to improve investor qualification. The more you will have access and you will store and structure the data around investor feedbacks, investor information, how they qualify your equity story, and how you move your equity story versus what they were expecting or understanding from the meeting they had with you, you will improve your ability to target the right investor audience. And Nicolas pointed out that very clearly. You have access to a lot of investors. How do you structure? How do you manage your efforts so that you really target those who will be helpful for you, will help you structure your company when you're going to be listed. And finally, with all this information, you will not be depending only on your external advisors or external forces to help you draw your equity story and build a convincing equity story. Again, IPO journey is all about meeting investors, delivering to them in a very short moment the best of your equity story, the best of your company in simple words so that everyone will understand and get on board with your company. But I think, Simon, it's important as well to see how this transforms into the digital strategies that a company can do in communicating to them.
Yeah, thanks, Laurent. So if we go to the slide, which is building your brand, when we think about what is an equity story or a corporate narrative or an employer brand or a consumer brand, what we're really talking about is just a brand, in simple terms. And a brand is what people say about you when you're not in the room. It's not just your logo, it's not just your tone of voice, but it's what people say about you and how people can kind of quickly conceptualize who you are. So when you're preparing for IPO, what we need to think about is, well, what do we want investors to say about us? What do they want us what do we want them to know about us? Do we want them to think that we're strategic, that we have a purpose beyond profit, that we're a growth company, that we're highly successful, that we're a long-term investment? essentially what this boils down to is we want people to think that we're a good investment. So what does a good investment look like? If we go to the next slide, well, a good investment is one that you can trust. Brunswick did a study about the different communications channels that a business has available to them online. And the investor relations website is the place that people trust most when they're coming for information. So 92% of investors said that they would use the investor relations section of a company website in order to investigate an issue. And if we go to the next slide, on the point of trust, what's also really important is when we look at all of these different websites, it's actually the company's investor relations website that comes out top across all of these other sites for the trusted platform where you get your information. So it's also the place where you've got the most control over what you want to say. The next slide is about how your good investment should be multifaceted. So your story that you're telling should be broad, and it should bring in all of the different factors that make you a good investment. So what we would do is we look at data analytics on your website to help emphasize this. So whether you are putting out a message from a CEO or an investment case or a video about your business model or your purpose, you can use analytics to measure which is the content that's most resonating with your audiences. And just recently, Google released Google Analytics 4, which takes this to another level. So more event tracking, more control over the type of data that you can collect. You will be able to work with events and things like that, so you can see not only what pages did people come through to on my website, but what did they really do when they got there? Did they download something? Did they make another kind of conversion activity? So when we're telling this kind of multifaceted story and we're building trust, we can use our investor relations website to build that story and to use analytics to test which are the parts that are really resonating with our audiences.
Well, thank you very much, Simon. Now let's move on to the second part. So life as a public company, and I'll pass on to you again, Nicholas, if you want to share us your thoughts.
Yeah, thank you. I will not make it too long, but once again, just to repeat that being listed is just arriving in the world of excellence, where each error is paid at a very high level price, and it's very complicated to catch the gap. So I would just mention that data can help to be more efficient in a listing life. It's a combination of control, discipline, manner in managing the investor relation, but also the capability to adapt in terms of how conditions are evolving, but also how the company evolves itself, how its narrative evolves, and also being consistent, being focused in the efforts that are required to make the investor relation a success. And when we are talking about focusing the effort, it's about making sure that you are talking to the right person, making sure that you are asking your management, your CEO, to meet the right investor with the right story. It's too much of a time to spend on investor relation. You need to measure your return on investment, and you need to be sure that your management effort is well targeted. So be sure that you will not face any data shortage when listed. This is the contrary. It's about making sure that all the data available is used in a meaningful manner for the company, and make sure that you will be able to monitor the market, benchmark your company performance, and make sure once again that you will be able to track the market sentiments and expectations. So there are a lot of possibilities in that field, thanks to data, to be more intelligent, to adapt the company, and to I would say gauge where the company is going compared to where the market going. What is the market expectations? I heard a lot of nice things about the brands, about the reputation, and here again, data can help to align what the company is doing, what the company is forecasting with the market expectation. That's highly strategic if you want to make sure that you will have a successful company journey. I will not mention specifically the shareholders' right directive. This is mentioned on the slide, but this is another way, and this is relatively recent across Europe. But this is a new tool that is given to listed company to access their audience, to have a more transparent identification of shareholders. It could be natural to say, okay, I want to make sure that my shareholding is known, but it was not that easy in the past times. It's easier now, I have to say, thanks to the shareholder directive. The spirit of this directive is to improve the shareholders' rights, but also to give more indication of the company in order to engage with their shareholder in terms of voting for sure, but also in terms of investor relations. So tracking investor, knowing the shareholders is made more efficient at the moment, and that's a good news for listed company. And this is clearly data driven. If we move to the next slide, data is all, of course. It's important to target investor. It helps companies to monitor investments, asset under management, and the evolution in your industry. Here again, data will support investor relation intelligence to implement a consistent roadmap to be executed with discipline, but be careful. Data is not all. Targeting, screening is not targeting, so you have to make sure that the identification process that has been performed is also well consistent with the performance of the company, with the story of the company. And also you have to be very careful, and you have to work the data, to map the data, to analyze the data if you want to make sure that your targeting is efficient. There are a lot of possibility to fine-tune the audience you will address for your story, just by making sure that you are aware about investors' portfolio, investors' investment, I would say investment profile and strategy. There is a growing also factor in investment decision related to non-financial performance, ESG things. Here again, the data can help to make sure that you are targeting the audience consistent in terms of non-financial performance. All of this is data-driven and helps company. And I will just finish on that saying that your narrative will evolve. Your narrative will change given your performance, given your strategic acquisitions, given your market momentum. If you have to refer to some example, what happened in the pharma industry last year is totally it has been totally new for companies which have to adapt themselves in terms of meeting new investors. We were considering this sector as a value sector, and which became a growth sector in 1 month's time, given the COVID pandemic. So you have to make sure that data can help to join accordingly an audience which is prepared to your narrative. Should it be a growth narrative, a value narrative, or whatever? But once again, that's something that has to be tailor-made and consistent with your situation and your message. And I think, Laurent, you have some nice
things
also.
Thank you, Nicolas, and thanks for your point. I think it is quite telling that when we addressed the point of listed companies and data, we highlighted the efficiency of the data. I think for many of us in the industry, we know how overwhelmed by tasks investor relations are. We also recognize that nowadays an investor relation officer is extremely rarely focused only on relationship with the shareholders and has to perform many more duties. You mentioned ESG. We can mention publications, PR, relation with the board, governance, etc., etc. And this also is something that is at the heart of all the data process and the use of data that we are all advocating to perform and improve the equity narrative of a company. Once you're listed, the equity narrative of the company, it will be nourished by all your meetings, all your interactions with your investors, with your stakeholders. And the main questions will be, how do you get the best out of it? And again, I think the efficiency reason comes first on that. Even before talking about artificial intelligence, even before talking about how to implement new development that Google Analytics, SEO strategy can provide, just making sure that you are at the base of the data collection, the enrichment of your equity story with the proper tools and the proper systems to capture that is extremely important. The second thing, which to me is very striking, is every company has now digital strategy, but I've rarely heard about a digital investor relations strategy. And how with the digital tools that all these companies are deploying, and you don't need to be Solocal or Google or whatever to have a digital strategy. Everyone has a digital strategy. How do you do and how do you apply this to your investor relation? And again, taking into account that an investor relation, even for a 10 billion market cap company, it could be a one-man show or a two-man show, which is clearly struggling under the burden of work. So how do we do that? What do we use? And what do we want to do? We want clearly technology to be a natural way and solution to cope with large numbers and limited resources. There are clearly web platforms which are extremely easy to deploy, mobile responsive solutions as well to improve the quality of engagement with your shareholders and to capture feedbacks and information from investors. You have analytical tools. Simon mentioned SEO strategy, clearly to improve and see what people are doing on your website, what type of information they're interested, and how can you improve this information if you can start to see that everyone is clearly checking information on your website on a particular branch, on a particular product. Then it means that probably either your company has a strong success building up, or you have an issue performing information on this. And clearly, your equity story will be nourished by your ability to use and cater all this strategic exclusive information that you as a company, listed company, are collecting from your shareholders and no one else can have to perform a better equity story. If we turn to the next page and the next slide, just a few examples and a few numbers on the recent experiments and recent deployment of a solution and how investors are reacting as well. And we did that on conferences, which are usually a very difficult exercise where collecting feedback information on a large number of investors is difficult. And what we saw is that clearly, the response to feedbacks and information after conferences were extremely strong. And more importantly, the information we could extract thanks to the usage of technology, to NLP classification tools, was extremely interesting and rich of information for customers. I would also like to highlight, just before we move to Simon, that for many companies, having a proper investor relations strategy is a struggle and remains a very difficult exercise. And not everyone can have the luxury to refuse investor meetings because you're too rich, too strong, too well known, and you can turn away most meetings from shareholders. Most of companies are on the other side. They want to attract people. They want to have the proper way to do that. And how do you perform that without losing too much time in the process? Well, technology is clearly your friend. And by the way, by using technology and collecting this exclusive data, you will be able to improve your equity story down the road. Simon?
Yeah, thanks, Laurent. So if we go on to the next slide, so if the journey to IPO is about building a brand in the eyes of investors, then life as a PLC is about perpetuating that brand and growing it. And the example that we've got here is Nike. And the reason why I've chosen them is because they really are an excellent example of not just saying things, but really showing it. So they want to show that they're an innovator. They want to show that they are a company that cares about social experience and environmental impact and diversity and inclusion. They're a leader in technology. And really, you know, the opportunity for your company website and the opportunity to really build your equity story, if you are these things, if you are a business with global reach that is innovating in your space, you can't just say that. You need to really show it. And using the data that Nicola and Lauren are talking about here, you can start to build up the story that you want to tell. But really, it's your investor website, it's your investor content, it's the whole digital stakeholder experience around your business's content that is going to take that to the next level. And it's not just about saying it, it's about doing it as well. And if we go to the next slide, you know, Lauren talked about we can't all be a company who doesn't care about investors, who doesn't need to go to the meetings. You know, we can't all be Tesla. If you look at the Tesla corporate website, you've got a few downloads of press releases, you've got some very basic information, but Tesla has built itself as a brand that people want to invest in. They don't need to do that through their investor relations content, but you probably do. Most companies do. I was talking to a company the other day that makes components that go into smartphones. So Apple has the brand. Apple can communicate with as many people as they want, and people will want to invest in Apple. But if you're a component maker who doesn't have that brand leverage, then it's through places like your investor website that you're going to need to develop that and really show it, not just say it. If we go to the next slide as well about Hotel Chocolat. So your digital estate is not only about a place where you communicate your story, where you put your story out there, it actually can be the story itself. So with Hotel Chocolat, they had incredible results last year as they shifted from being a UK-based bricks and mortar business to a global digital business. So digital can be the story. Digital can be a key place where you are showing yourself as an innovator, not just a place where you talk about the things that you've done. It can be the story in itself. And I think now we're going to move on to today and what's to come. Gabrielle.
Exactly, perfect. Thank you. So now let's pass on to Nicholas to this part. Thanks.
Thank you, Simon. Thank you, Laurent and Gabrielle. Just to think about the future and what's next, AI has been mentioned. So for sure, in the very daily operations of our IR professionals we are talking to, AI is not at the center of the game for sure, but we have to anticipate. A lot has been said that there are a lot of data, and this data has to be organized to make the work more efficient. But AI can help. Just would like to mention that digital tools are become a must-have. It was nice to have a couple of years ago, but more and more companies are equipped with a smart system to interact with investors first, but also to track any interaction with their investor. It's not just for the sake of recording information, recording meeting notes, and I would say schedule some agenda. It's also to make sure that this intelligence never goes outside of the company, never relies on one person only. I'm sorry to say that, but the company has to be organized and to implement a sustainable way to use this data and to use this intelligence given the investor relation in a very long term. Always today, these are the smart tools, and we are proposing some to say, okay, let's record your activity, let's share your information and work as a team. This is not a one-man jazz band, as you said, Laurent. Investor relation has to be, I would say, a shared project all across the company. It's of course the project of the financial direction of the IR team, but it has to be also undertaken by chief industrial officers, chief operator officer, etc., to make the story consistent once again. And these systems are helping companies to make sure that the information is shared, that the concern, that the questions of investors are shared somewhere, with the ability to tag other members of the company to get answer to the questions, etc., etc. And once this work is done, once this intelligence is embarked into the company, it's even easier to set goals. It's even easier to make sure that the meetings you will schedule in the future will be consistent with this track record, will be consistent with your shareholding, with the goals you have in terms of meeting new investors. So it's all about investor engagement, having a direct access to investors for sure. And more IR platforms are now providing a smart planner that makes sense, because you know that MiFID impacts are relatively clear in the way you will access investors. It's even more efficient, of course, and it will be organized around including your goals, including your holders' relationships, past interaction, meeting notes, etc., etc. So it's a combination of making the agenda more efficient, making the agenda taking into account your story, your investor relationship in the past, and making sure that the concern, that all the verbatims that are recorded will be taken into account with your future meeting. And this information cannot just be shared by one person, but it has to be recorded across the company, as I said a bit earlier. So that's not the future in 10 years' time. That's what's next for tomorrow, honestly. There are huge investments at the moment. And as I can observe it at Euronext, serving companies all across Europe, this is now a must-have. And I have to say that this is a great help for companies.
Yeah, and just building on Nicolas' point there, it's not just talking about what's next as in 10 years' time. Let's think about what's now. So, you build your brand, you perpetuate it and develop it and build a strong story around it. What you really need to be doing is forging a deeper connection between people and your brand. And, investors are people. So one of the things that's not changed ever for 150 million years or more is the human brain. So the way that we interact with people is not going to change. We might change the methods in which we do that, but people are looking for the same thing. People have the same needs. And as a brand, you need to connect to people for the same reasons. So the image that you can see here show two different brains, different brain activities. The one on the left has lots of activity going on. The one on the right is in a very calm, almost meditative state. So which of those do you think shows someone who's choosing a brand that they know? A lot of people think that it's the brain on the left, because all of that brain activity thinks someone's exciting about the brand, they love that brand, they're really interested in engaging with it. It's actually the brain on the right. When someone is choosing a brand that they know, they're in a calm state. This is where the phrase "a no-brainer" comes from. They're making a decision that's an easy decision to make. So by building a brand, by building a brand that people can make a deeper connection with, you're actually making it easier for people to decide to invest in you for the long term and to stay with you. So the way that you do that is you obviously have to reach a lot of people. You have to grab their attention, and you do that through creativity. You have to build distinctiveness and consistency in your brand. People need familiarity so that they come back and they see these different cues that connect your brand to them. And essentially what you're doing is you're building an emotional connection between your brand and the people, and you're generating a motivation for them to go and do what you want them to do and what they want to do in connection with your brand. So while we look at the things that change, we should also consider the things that never change and always stay the same. If we go to the next slide, Archie Norman wrote in the FT, so he's a chair of Marks and Spencer's. He wrote about how digitalization is an opportunity to revive shareholder democracy. So as we're looking to forge deeper connections with people, let's think about the fact that we can now do that on a much broader level through what digital enables us to do. So he talks about the AGM being a thing of the past, that the days are gone when people would travel 2 hours for a cup of tea and a digestive biscuit. So they had 47,000 shareholders take part in an online event, which meant that they can democratize the way that they talk to people. And essentially, you don't have to wait for the annual event when you might meet your shareholders. You can connect with them more regularly in an easier way and in a way that they can engage with your brand when they want to. So updates can be immediate, as well as having things like AGMs. If we go to the next slide, the way that it's potentially going next is that we start to look at, in this article from Nish Kateka, who's from Finboot, digital AGM being one positive step towards what the future of investor relations might look like. But what also about things like blockchain? So where we can have a decentralized network that builds trust around our transactions, our technologies, and having distributed technology for that. So a completely democratic shareholder engagement. And that really builds trust. So right the way back to the first things that I was saying, how do you see yourself as a good investment? How do you project yourself as a good investment? Well, that's an investment that people trust. And technology can help develop that trust. It can help build that transparency and trust with all of your investors. And really, that's what we're all trying to do. I think Laurent's going to talk now a little bit more about our IR tools.
Yes, thank you very much, Simon. While hearing you talking about deeper connection with between shareholders and companies, I couldn't refrain from thinking about the best and the most valuable brands, like, for example, in the luxury sector, and how they've been able over the past 150 years to nourish, culture their heritage, their history, pass it on to a lot of people internally, and continue to build and using new technologies to develop new channels of sales. If you look at the strategies of LVMH, Cartier, Bulgari, Balenciaga of these worlds, you will be amazed to see how fast and Chanel, how fast they are embracing new technologies, new digital tools to improve their connection with their shareholders, with their clients, and expand globally at a pace that's probably never been seen before. So as far as IR and IR tools are concerned, where do we stand and what's next? And I agree with Nicola as well. What's next is in fact what's already now. What is sometimes a bit striking is the fact that too many people are still waiting on the sidelines to see what they should embrace, what type of new sectors, new strategies, new services they could implement in their IR strategy. There are already tools available. Again, artificial intelligence and developments like, for example, classification, natural language processing are extremely interesting and full of promises, but are still, in development phase and not as smart as the human brains in some instances. But clearly, there are other ways to improve things, like generalizing the collection of exclusive data. As a corporate, you should know that you are the only one to be able to receive this valuable information you get from your shareholders. Not your brokers, not your financial advisor, not the equity analyst will be able to get directly unfiltered, unbiased feedback from your shareholders at regular occasions. The second thing is that with COVID, people have had the habits to have much more regular updates, more regular visits, more virtual visits, more occasions to discuss with companies, get information on a format that's virtual and allows much more interactions. We can hear companies now ready to do a capital market day at least once a year, maybe twice a year, to use the technological information that they're receiving from their shareholders to update their strategy more regularly and get to the point of what their shareholders are expecting from them. Increase feedbacks. We hear a lot of corporates complaining about the fact that feedbacks are slow, feedbacks are rare, feedbacks are anonymized, etc., etc. But again, technology, digital tools can help you collect more efficiently this information already now. And we are, of course, looking at new forms of collection, like voice to text, automatic recording, the use of video, the use of automatic translation, so that you don't have, as an IR, to wonder if the guy who may not be fluent in English or in your mother tongue has made has lost his mind when he complained about you, or it's just because he chose the wrong word. All these type of issues can be helped and can be solved with technology. And finally, at least, for those who are starting, use a CRM, create your database, start to look at the data that you already own. How can you onboard this data to the next steps? Discuss internally if you have IT team, dev teams, data analytics people in your company to see how basically you can already start to build and create the receptacles of data internally to help you grow your strategy.
Well, thank you, everyone. Now let's maybe move on to the question and answer parts. So first question from our audience: digitalizing IR brings on board a new type of investor, which are retail investors. So how do you see this class of investors shaping the equity narrative of a company going forward? So maybe Nicolas, Laurent, and then Simon, if you could share your thoughts on this question, it would be great.
Yeah, happy to introduce the topic with small statistics from Euronext on this topic. I will leave the floor to Laurent and Simon, but just to give you the context, since the pandemic, there has been a real pandemic effect on the activity of retail holders, probably because of the downturn of capital market. It was a great opportunity for a lot of investors to step in first, but also we assume, it's not proven, but we assume that working from home, being connected from home has also been a huge opportunity for younger, more active retail investors to participate into the market. So just to give you numbers, we have identified something like 200,000 of new retail investors in France only, just to give you the volumes since the pandemic. In terms of trading also, the activity of retail holders have been clearly increased since the pandemic. I will not give too many statistics, but retail investors were contributing to something like 2 to 3% of the order book on Euronext prior to the pandemic, and we have observed a peak to 7% during the pandemic. So that's more than a double of their market share in the order book. And today this is stabilized around 5 to 6%, which is clearly higher than in the past. And the last point I would like to raise is also the critical role of private investors into IPO process. It has been proven during the FDJ, Française des Jeux IPO in 2019, but more recently on Believe IPO also, on OVH Cloud last week also. So this is now become a true element of the equity and of the equity narrative of company to take into account. Absolutely. And once again, digital data can help to access directly this audience.
If I may, before you jump in, Simon, I think it's extremely important. And again, I will just focus on the efficiency gain first. If you are a pre-IPO company that's been used to raise via private placements, like one company that we are following, for example, in the US, and you have 900 or 950 individual investors, imagine for the CEO and the CFO to manage this amount of expectations, calls, organization of meetings, etc., without having the proper technological tools and the data to analyze who comes. So that's one thing. The second thing, which to me is very important, is that improving your equity narrative, improving your investor engagement is extremely key for one thing. When you will need to raise capital, when you need to do a capital increase, when you need to do a bond issue, having the ability beforehand to qualify your investor base, to know their expectations, is obviously gonna improve your cost of capital and allow you to organize a transaction in the best possible way, without having to rely too heavily on external sources. And I think this is very important. The last thing I would add is the what is typical from retail investors. A retail investor, what does he do? He will consider his investment in equity the same way he looks at booking a trip. He wants to have something simple. He wants to understand the stuff. He's usually a customer of the company and he likes the company. So that's why he will continue his engagement with the brand. And I think, Simon, that's something that is critical for you into investing in the company.
Yeah, absolutely. I think when we talk about retail investors, we're probably talking about a broader audience of people with really different reasons why they might want to invest, with different levels of knowledge of investment. We're not talking about people who are professional investments who know where to look for certain things. So we have to democratize that content as much as possible, make it as accessible as possible, and think about the different reasons why people might invest in a company. It might be because of your sustainability credentials, or your diversity approach, or a product that you've released that's had incredible coverage in the news. You might need to think about having a multilingual approach to your digital content to make sure that you can go worldwide with that. But really, it's about speaking in plain English and accessing a kind of really broad reasons why people might want to invest. So going back to the kind of analytics point that I made earlier, putting content out there, finding out if it resonates, building on the things that work, doing less of the things that aren't working, and regularly communicating with people as much as possible. And if you can do it on a global scale, even better.
Great. Thank you very much for your thoughts. And since we have just a few minutes left, maybe let's just quickly review and discuss the results of the poll. So when we asked which of these types of data do you find most valuable when defining your equity story, we had about 50% of the audience answering investors' feedback or investor perception data. Then about 30% answering those provided by advisors and brokers, and 10% each for the answer those who provided by PR agencies, and 10% for internal data using public databases such as Google Search and FactSet. So maybe if the speakers, you want to share a bit your thoughts on this, it would be very interesting.
I'll go first. I would love to actually see more investor feedback and perception data for our clients. When I talk about things like analytics, so often it's anonymous and you are looking at people as numbers. So this was a number of people who visited this page, a number of people downloaded this. But actually to have feedback and perception data from investors would be fantastic. You can do that through things like surveys on your site. We've had some success in doing it. I definitely would like to see more people doing that. And if 50% of the people on this call are using that data, I think that's brilliant. I'd love to see more of that.
Yeah, on my side,
I cannot say more. I mean, clearly this is clearly why we created Praexo. So these results are extremely encouraging. The fact that feedbacks are a necessary item to improve companies' equity stories, equity narratives, to improve their engagement with shareholders, but not only with shareholders, with also bondholders, convertible bondholders, is something that companies are realizing and trying to implement at their pace, as its natural change, and especially implementation of digital strategies are sometimes an issue, because it's the change itself is creating uncertainty, and people are not sure how they have to embrace these new opportunities. But what seems to be clear to us, I mean, I think Nicolas, Simon, when we discussed and prepared for the webinar, the technology is only improving and empowering companies to make a better job, and I think that's key, and that's why we are pursuing the job and the businesses the way we do.
And I was just about to say that we do at Euronext encourage companies to be more autonomous, more intelligent. That's obvious, but that's the way we consider that the more companies are doing their homework, in terms of preparation of their investor relation, collecting all the noise, all the feedback from the market. That will be key for them to be, I would say, more intelligent. That's true, but also more in a more balanced dialogue with their partners to provide the story to the market. That's very important. That's why it's a bit small for me. The 10% of company using internal intelligence, internal statistics and data to provide a strong investor relation management. I think this is something that has to be taken into account in order to have company more agile at the end. That's very important.
Great. Well, thank you very much all for your topics, answers, and insights. I think this concludes it for our webinar. Well, thank you, Nicolas, Simon, and Laurent for sharing everything. And thank you all for attending this webinar today.
Thank you.
Thank you very much.